To the A.J. Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, A.J., whose primary mission in life is to help you become a better investor.
All right, welcome back, everyone, to another episode of the A.J. Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, A.J. Brown. Good morning, A.J.
Good morning, everybody. Good morning, Sip.
Happy August 5th, and I keep coming back to this concept of, we're looking forward to some summer doldrums, but I feel like we just passed it by because we're getting a lot of good news coming out. It's moving the market, and today's news was kind of on the surprising side, so I figured let's just dig in. Unemployment.
Yeah. Unemployment numbers, I've got the report up on the screen right here. They blew by expectations, right? In fact, not only did they blow by expectations, but when these government reports come out, not only do they issue the numbers for this current month, but they go back and they do a better job for the previous month. So for the previous month, they had come in at 372. They've revised that up much higher, right? 398. And then they expected a dip, and instead of getting a dip, it came in over twice expectations. Unemployment down. And some people don't know this, but these two surveys that the government does are unrelated. So what's interesting about that is they actually go to the employers for the non-farm payrolls numbers to actually get those type of numbers. And then they do a general survey of of society for the unemployment rate. So these are not always linked, but in this case, unemployment's down at like record low. So everybody's employed, which is a good thing. Participation rate staying about the same. Here's something that the Fed is going to be putting their eyes on right here. Average hourly earnings. So this is the inflation of people's paychecks. So paychecks are up 5.2%, which is great. That's like a nominal gain of 5.2% on everybody's paycheck. People are earning more money. Problem is inflation is at 8%, 9%, right? So realistic gains is that people are actually down 3%, right? They may be making more on their paycheck and feeling good compared to what they were making last year, but things cost way more than they've been making. So the Fed, what this actually tells me, and Wall Street's probably going to pay attention in the next weeks, is that this could give the Fed more permission to raise rates and sell more bonds.
Are you talking about specifically the non-farm payrolls or the average hourly earnings? Because if I was going to assume, I would assume that inflation can move higher much faster than this average hourly earnings, right? So
That's the problem, right? So average hourly earnings, that means how much more you're making this year compared to last year. So if you're making $100,000 last year, you're making $105,200 this year. The only problem is, a can of food is way more expensive now. So even though you're making more on your paycheck, that can of food is more expensive. So they need to keep pushing down those interest rate numbers, that inflation number, in order to balance this whole thing out. And so, sadly, when the Fed pushes down, these interest rate numbers, the inflation numbers, by raising interest rates, it affects these average hourly earnings. And since the average hourly earnings haven't been affected, right, the Fed is going to say, oh, well, we seem to not be affecting the employment market. We can push harder.
yeah, and the initial market reaction was a sell-off, and then this morning we went ahead and filled that morning gap.
We're
And
moderating for sure.
yeah, and I don't know if we want to run through the S&P, but I guess we'll go through the balance sheet here.
Just really quick, the balance sheet. So, we always find out a few hours after this show airs what the Fed did with respect to their bonds. But we were concerned because for 2 weeks there, they started buying it. But then as of last Friday, they sold off everything. And if you look at the overall trend, that sell-off is happening. So they are not only affecting interest rates, but they are also pushing investors towards bonds and away from more riskier investments. But yeah, let's turn our attention to that S&P 500.
Yeah, because I feel like with that news last week, right, was they raised interest rates, and ever since then, the market's kind of been in this up pattern. But we're hitting. It looks like we might be hitting some support here at what is it, like 41, something in that area, 4,100.
Well, I don't know about that. See, I take a look here at a what I call a lagging indicator. So a lot of people use lagging indicators in order to give themselves signals for trading, signals for all kinds of things. And one of my lagging indicators is the 3 and 5-day exponential moving average. And you can see a line. This is a conglomerate of those two. So whenever these two cross the zero line, that confirms that a top or a bottom has been found. You can see that we are heading down here in this little 3 and 5-day EMA crossing, getting close to crossing the zero line. However, look at what it did just a couple weeks ago. It came down and then said nope, and it buzzed that line and then went higher. So I'm not actually concerned that this is the end. We do have to see what happens. Like you said, people were a little bit. In fact, let me zoom in a little bit so people can see what's happened in the most recent here. People were worried about that after hours from yesterday's close. They sold off a little bit, and now you can see that they're starting to buy back and bring us back up. But we need to let this marinate, and the weekends are always times for this stuff to marinate. So it's important that we pay attention to what's happening on Monday. Could this be a top? Maybe. We don't know. I don't have my confirmation yet. It could actually do like it did a couple weeks ago and buzz. What we have to do is just play what we see and not speculate on what might be. Oh, that rhymed. That was pretty cool. But on the other hand, coming back to kind of our analysis, this is a wonderful range expansion move. And if it stopped right there, I'd be okay with it because every range expansion move needs a little bit of contraction in order to keep the expansion going in the long term. So if we took a moment here and paused and came back to about 3950, even 3900, and then headed up higher, I'd still say we found ourselves a bottom in July and we're on our way up.
Yeah, and it seems like the next question that a lot of people are asking is, well, with this strong unemployment, what's the Fed going to do, right? And could they raise another 3/4 of a basis point, right? 0.75 versus a half point, and then it seems like most people are turning their heads to this CPI number next week because now that we have a sense of unemployment, we got to get back to seeing where inflation is. So if that number comes down a little bit, maybe that's good for the economy.
Right. Inflation, of course, that is good. But just because, so even if that number comes down, it doesn't mean that we're actually shrinking. If it comes down, it means we're just not growing as fast. And they still need to get that kind of balance in line. So the question is not whether or not the Fed is going to raise interest rates, it's by how much. And with these employment numbers, it looks like it would lean more towards the aggressive side. However, the Fed's not meeting again until the end of September. So we have a whole nother employment report to come out. We've got a whole nother set of CPIs to come out. So we've got a little bit more time to come out before the Fed is set to meet and, adjust monetary policy. Plus, don't forget, we've got possibly this huge fiscal bill that's coming down. And what's neat about the fiscal bills versus the monetary policy, fiscal policy versus monetary policy really just determines how much money is floating out there, right? And how much money is getting taxed in its use, right? That's what interest rates do, is they kind of tax the money as it's being used, as it's being passed from partner to partner. And then, of course, the bond buying that the Fed does behind the scenes is just, should we dump money into the market for people to use or start taking it out, right? The liquidity measure. What's interesting about that policy versus fiscal policy is a way of kind of balancing it. And this move, I'm kind of bullish. A lot of people are not as bullish, but I've actually read through this bill that is about to be passed. I've read through all the different components of the bill, and it is true that anybody under $400,000 is not going to see this on their bottom line, at least in tangible numbers. Now, you'll hear the talking points that yes, they will. And that's just because what this bill is doing is it's actually taxing where all the money wound up dumping. So when the Fed dumped all this money into the markets, it wound up in the coffers of some of the richest companies and richest people, right? Their balance sheet grew quite large. And what this is doing is kind of redistributing that wealth. But what people are worried about are the contradictory talking points are, will those people and those companies that are now having their wealth redistributed, will they try to pass on the cost of their goods to the people and raise prices? And so people are, it gets quite very muddled in the news, but I'm quite bullish actually about this fiscal policy change that may be voted on. So we should see that actually playing more for the little guy like me and less for the big guy, right?
Yeah, well, it's always good to hear that our politicians are improving our lives with their work. So that's a positive.
Rare
Yeah.
occurrence.
Another hot topic in lieu of this rally, this market rally, is the crypto rally, right? And so
Yeah.
a question that has come up is, have we found a bottom? And so I wonder, what chart would we use to analyze that, because, or to answer that, because there's so many cryptos, right? So
Yeah.
so
Yeah.
Bitcoin has been, let me just pull it up. I think, we've been seeing a broad rally across the board. What do you think that's in part to?
Well, I think that we have to be a little bit worried. This is a one day, but let's take a look at, like, for instance, the last year. So Bitcoin definitely got kind of a reckoning at their 60,000. That was their high, and now they're back down at 20,000. But you see that similar to what we're seeing in the S&P 500. I mean, the crypto markets are very much giving us a similar chart to what we see here in our overall stock market. And that makes sense, right? Because the way that the Fed is adjusting that needle for investors by selling their bond purchases has the same effect on the stock markets. Especially, we probably could find a better correlation to crypto in the NASDAQ. So if I pull up COMP, nope, let's come over here to indices and let's pull up, here we go, NASDAQ, maybe up at the top, there we go, $COMP. This is probably closer because the NASDAQ has in its NASDAQ composite more of the riskier assets in the stock market. And so what the Fed has been doing by selling their bond purchases is they've been moving the needle that the investors have in their portfolio more towards bonds and less risky stocks. And therefore, the speculators who have been doing things like the more risky stocks and cryptos, and then even things like we've talked about months ago, like SPACs and REITs and things like that, those seem to be defunded to a point. It looks like a bottom has been found. But my only concern is across the board for crypto and all of this stuff, for people who are purchasing it for long time asset appreciation, is let's wait until September before we call this a bottom, right? Investors like to come back in full force after the first week of September, after the U.S. Labor Day holiday. We haven't really broken through this level of resistance that we established, this descending level of resistance. I wouldn't be surprised if we see a little bit more up, but I think with the Fed move at the end of September, especially if numbers don't start to modulate and we still get strong employment numbers, we still get strong inflation numbers. I think the Fed's going to keep hammering, and they're not taking prisoners with speculators this time around. They're just full on executing them. So I'd tread lightly.
Yeah, it's almost been a sigh of relief to have some of this crypto rally, because there was a lot of drama around it for a couple of weeks. I know two of the big brokerage firms filed for bankruptcy. Like a lot of people that were holding just couldn't keep holding, and even Tesla got out of all their position. I
That's
think
right.
MicroStrategy, or one of the micros, they fired their CEO because that was part of his strategy, was loading up on Bitcoin, and it went south. So it's a sigh of relief. Another market that is feeling the effects of everything that's going on is the housing market. And so
Yeah.
with these interest rate hikes, naturally the housing market is going to continue to slow down.
Well,
Any updates on that?
so things are slowing down, meaning that on both sides, there's less buyers out there. Money has gotten expensive, although there has been a little bit of a reprieve on mortgage rates in the last couple of weeks. Maybe the summer doldrums are affecting the mortgage rates. They dropped down to, they were up around 6. I think they're down around 5 or a little bit less right now. But I think that, buyers are taking a break. Sellers are not getting what they had been getting, where you had to, like, I don't know, name your first kid after them, as well as put in $100,000 deposit above and beyond the asking price. That's over with, right? So sellers have to be smart. They're not going to they can't ask top dollar anymore for pretty crappy pieces of property. They have to right price. So I think you're seeing that. But on the supply side, you definitely are seeing the construction folks, and you're seeing new home sales. They're like, it's not profitable for us to do this. So they're just not building. So when you don't, even you're having an equal drop in supply and demand, which means that the prices are going to stay about the same. Now, that is definitely regionally based. So any of those regions around the US where we saw a ton of people flocking, especially because they could work remotely during the pandemic, all those places that had kind of a big bubble, those you're starting to see prices fall. You're even starting to see rent prices fall in those areas. But then in other areas, everything is just very much stable, right? So just as always, the more riskier assets that ballooned in price are starting to fall. The normal assets, the standard assets out there, are just staying right priced. And I don't think, if you're in a market where you've got if you've got, like, just it wasn't a ballooning market. It wasn't like an Austin or a Las Vegas. What other? I think Florida, a lot of areas in
Mhm.
Florida, Tampa, Orlando. If you're not in one of those areas that was uh, inflated quite large, then I don't think you're gonna see much of a discount in prices. The other thing is if you're a real estate investor, there's a ton of money out there in real estate investors. And don't forget, this year is the last year that they can get that special tax deduction for buying multifamily homes. So if you're a real estate investor, man, you're in for a lot of competition on buying just like bread and butter, either multi-units or single family homes. So the good news is, if you're a regular buyer, then you might be able to still get a good deal for your family home. But otherwise, I would almost recommend for folks to just kind of stay the course. And we might see that in the next year or so in some of the stocks that we follow, like Home Depot and Lowe's. I think people are going to wind up staying in their homes longer than the usual, like 3 to 5 years, and then flip it for something bigger. I think we're going to see people staying 7 to 10 years, and we're going to see the whole remodeling industry and Home Depots, Lowe's, any of those. I think we'll see a lot of people adding solar to their house. So we'll be looking at some solar stocks, because I think that's going to keep getting bigger and bigger, especially with the government incentives. So little change in the industry from trading up versus just renovating and making better.
Yeah, I feel like the housing market was just due for some change of some sort just because it's, prices have been going up. So we'll definitely keep an eye on that. All right, so moving on to the next part of our show. So if anyone watching, listening for the first time has a specific ticker symbol that you'd like AJ to run through, feel free to drop it into the chat. Go ahead.
One more thing, man. Can we take a look really quick at the VIX?
Let's go.
So this is the VIX, of course, is a measurement of how much fear versus confidence is in the market. And so in this case, if you see the VIX moving up in price, it means that people are afraid. And if you see it moving down in price, you start to see that folks are getting a little bit more confident. And so I have to point out that despite whatever uncertainty people feel, the fear is coming down, and this dotted line level is the mean, right? This is where the VIX, if we take it looks like, if I show you that picture and you say that ain't no mean, we're way above the mean. But if you look over time, like if I bring you back 2 years, you can see that a lot of the time spend below the mean. If I show you, for instance, 10 years, you can see that most of the time we spend below that mean. And it's just recently that we're living above that mean in this kind of uncertain. But we're coming back down, and it's almost like there's a calm. And I don't know if, again, that's the summer doldrums, but what people are doing is they're not hedging their investments as much. They're letting them just go now. The VIX measures how much insurance people are buying on their investments, and it's like they're selling off. So that's an interesting data point. We'll continue to watch this.
Yeah, so in theory, if this starts to tick up again, that uncertainty is increasing, right?
Yeah, which, by the way, is not a bad thing for us option traders. So bringing it back to what I do, options actually are key to this. So options raise in price when there's uncertainty. And so what's nice is if we know that options are raising in price, we become option sellers, right? We always like to position ourselves on the correct side of the equation. So if people are willing to pay more for options, we sell them. If people are wanting to pay less for options, we buy them, right? So always make sure you know what the heck is happening in the market and on your particular stock, and then make sure you position yourself on the correct side of the equation. That's what options allow you to do.
Yeah, and with that, if anyone wants to get a quick lesson, a full breakdown of AJ's strategies, how AJ jumps into these positions, how the trading trainer crew, weekly mastermind team gets together and discusses positions, opportunities. We've got a special free workshop for everyone to join. I'm going to go ahead and drop the link into the chat. We'll go ahead and take a break here, and then we'll come back and we'll dig into some options trading opportunities. So stay tuned.
Let's do it. I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
I feel like that clip was right on cue, because in that clip you're driving a Tesla, and our first ticker symbol here, I believe, is a Tesla competitor. Ticker symbol NIO, which is the Chinese version of Tesla. Is that a fair description?
Yeah, absolutely. NIO is pushing hard in the EV market. They're a China-based company now. We know that a lot of the China stocks got really pushed down over the last couple of years. You know, the when you have a overall overarching government like China that kind of tamps down capitalism, well, then it makes it difficult for investors to feel good about putting their money in with those symbols. But with that said, China has kind of come back and pulled off of some of these companies recently and was like, you know what? we want to remain competitive economically with this other superpower. So, with that all said, I've been following NEO for a while now, and let's zoom out on this NEO chart because I've got some thoughts about this. So, NEO had really propped itself up in 2020, and now we've been seeing this downtrend. Now, very similar to the S&P 500, we've got this descending line of resistance. You can see it overhead here that is on the long term, and we haven't quite got there yet. But in the short term here, we're doing that pattern where every time we go up, we expand. Every time we pull back, we come to about halfway. Then we expand, come back, expand. In other words, we've established ourselves with a fairly mature uptrend. So here's what I want to do. And I wanted to suggest this because this is a good company and there's a lot of liquidity in the options. So if I come over here to the option chain, let's come over here. You can see that we're trading on the near-term option every 50 cents. So, I mean, that gives you so much granularity. And there's a lot of people, if you look at the open interest, I mean, 2,215 open interest contracts where 332 of them have already been traded in the last few hours since the market is open. This one's got 21,413. That's on the call side. On the put side, 20,653. So a lot of folks are trading options. You're not going to have any problem finding liquidity to trade options on this. And it's one of those companies where what we can do, we got a signal back on July 29th. So last week, we got a signal that we had found a bottom, and we're kind of faltering there. So this would be a really nice point, I think, to maybe, and I'm not saying go all out on NEO because this is a more speculative, but this might be a good place to either paper trade or buy some back month call options. So some call options that are deeper in the money and farther out in time. In fact, I wouldn't mind going all the way out to, with these particular call options, there's a series here in March of 2023 with a lot of liquidity on it. I wouldn't mind going with some of these, like maybe the $15. There's 2,977 open interest. Looking at that particular option that's down here with this strike price and letting that roll a little bit. And again, where my concern is with buying something long here is right here with this guy, this overhead resistance, where this clash is going to happen, whether we're going to bounce off of this line or bounce off that line. In either case, I can sell premium, right? If I get some sort of appreciation on my call and it reverses on me, that's a perfect time for me to sell some premium, buy myself some protection with a lower strike price. And as that thing starts to, that's a shitty color. Let me try a blue. There we go. As that thing reverses, my protective option is going to appreciate, which is going to totally offset any sort of temporary discount I have to take on that call option. So that's going to offset, and the protective option that the premium I sold will also offset it. In other words, I'm going to make some nice money on an income, a monthly income on this. And if it does continue to go up, then my initial purchase is all to say, that sounds very confusing. I think some people can deconstruct what I just said. If not, you'll watch it on the replay, right? But I think this is a nice bet that I would. And if you're new to doing any of these option trading, why don't you do some paper trading on this and see how my strategy works? I think we should follow this one, SIP. And as we get the next signal, so right now we've got the signal to go ahead and go long my initial covering position. So go long maybe the March 15 call. And then we'll see what happens when we get up here. As soon as I get a signal for a reversal, we'll cover it during this show and we'll talk about what to do next.
Yeah, and if you're looking at NEO to be a comparison to Tesla, right? They are starting to innovate. They are starting to produce. And so Tesla's had a phenomenal run up the last, I don't know, 10 years or so. So Neo definitely has the room to get back to those levels it was at a few years ago, maybe 2 years ago or so. So very promising opportunity here.
And
Uh,
I can definitely hear some people saying, "Hey, earnings is coming up on August 11th." So, wait until after August 11th.
that
If that Go ahead.
and the Chinese company earnings are a little, from what I've heard, they're not always 100% accurate.
And you can kind of see that here in previous earnings. The market really pays them no never mind. But I do hear people in the back of my head saying, "Uh-oh, earnings is coming up next week. Maybe." Well, sure. If earnings is a concern of yours, just wait a few days. Let that earnings come through and then start your trading pattern. That's fine.
All right, so moving on. That is AJ's pick of the week, and so now we've got
Neo.
our viewer round where some of the Trading Trader fans, viewers, members throw out some questions, some ideas, and then we get AJ's feedback. So our first one is from Tim in Sun
Okay.
Valley, Idaho, and he's asking about a pandemic darling, in that being AMC Theaters,
Ah,
ticker symbol
yes.
AMC.
The movie theater. This was the one that got all of that love from the Reddit investors. So here you can see kind of the bigger. I'm looking back 2 years. You can see this was when that all that excitement around AMC and GameStop happened, and since then, AMC. What was nice about that buildup for these companies like GameStop and AMC is, as a company, even though there were these shenanigans playing in the market, the company got some nice solid dollars in order to do stuff with, right? Because when people start investing in a company, the company now has money in order to do marketing, in order to refurbish theaters, things like that. So AMC has slowly been using that, and it's actually, that injection of income wasn't a bad thing for AMC. With that said, it did kind of pull itself back down to finally come back down to about the $10 range. Now I'm going to zoom in for you and let's see if there's a trade. This was Tim.
That's right, Tim from Idaho.
All right. So, Tim, it looks like we've got the beginnings of a little bit of an uptrend, and that's kind of cool, right? What I'd like to do in order to take advantage of that uptrend, it looks like yesterday we had a top that was formed, even though that it was a down day, it was a gap up. So that was considered a top. Let's let this thing come down a little bit. And once it finds a bottom, so long as that bottom is kind of along this path. So if we go below, say, $14, I'd abandon what I'm about to tell you. But so long as we find a bottom above this $14 zone right here, I would consider, making kind of again, this is a more speculative play, but just like I said on Neo, let's buy some back month deep in the money call options that'll kind of move in line with AMC. Let's see what their option um, looks like. So again, I'd probably, they have March 2023. They've got some nice liquidity here for a smaller portfolio, nice small bid-ask spreads. So yeah, I would consider maybe even here the $15 or $14. Again, depending on where it reverses, I would buy myself some calls, and then I'd let that thing appreciate. And depending on how far it appreciates, I'd either cash out, right? Take my profits and run. If it doesn't appreciate that far, if it winds up stopping at this ascending line of resistance and coming back down, instead of cashing out, I'd sell some premium, buy some protection, and create an income trade out of it. So this is really poised well. Give it a few more days. to find a bottom. And so long as that bottom's above $14, let's consider, and again, a small trade, right? Or a paper trade. But I think this would be a fun one to follow.
Yeah, and I just always love adding that it's got a phenomenal price point, right? In that 20, a little under $20 for
Yeah,
you know,
absolutely.
yeah, good priced options. All right, so moving on
You
to what.
what before you go on, I heard through the grapevine that you did an option trade on a symbol that popped up past the premium selling protective option buying, and you wound up taking a big profit. Do you want to share that one?
Well, you're the expert here. I just am happy to become comfortable with buying options, right? And so when you don't have the capital to take a 100 share position in a stock, right? So I was feeling optimistic about Lyft, right? And
Yeah.
so I just bought one of the back month calls. And yesterday they came out with earnings. It seems like a lot of the rideshare companies are moving up. And so I took a quick little 150% profit, something like that. But to me, it was just using the ideology of options to take a position and then not having to put up the capital. I mean, I love that. I feel very comfortable. I love teaching people and getting people excited about the power of options in that format.
Absolutely. So you used one of our back month leveraged options, and then because it shot up so much, there wasn't really a need for you to sell premium buy protection. Instead, just taking the profit on it. I mean, man, 150% ROI. That's exactly what the doctor ordered. So good on you, man.
And part of it was just that sweet spot for the stock price, right? Like it was there at around 13 $14. And speaking of the platform where I was making these trades, and
Yeah.
that is on our next ticker symbol, right? And so
Oh,
Bart
okay.
from Milwaukee, Wisconsin wants to know about Robinhood, which is really in the news, specifically as of yesterday, seeing as they slashed 23% of their workforce, which I believe, brought the stock to a rally. So, what are you seeing on your end in terms of Robinhood, ticker symbol HOOD?
All right. So this is the brokerage that, of course, has made it very easy for anybody to get into the market. They actually have deals with the different exchanges where they can pretty much give you almost zero commissions on your trades, which is awesome. They've also really pioneered the most simple of user interfaces, which means so long as you know what you're doing, you can't go wrong, right? With that said, they have found a bottom, and there was a little bit of a rally after earnings, and they made that announcement that they were laying off their workforce. Listen, Robinhood is a company that's really technology based, and so I didn't go down into the details, but I have a feeling that who they laid off was like people who were trying to like like sales folks trying to get the platform, but I think for the most part, word of mouth is selling this platform now. All to say, I think this is just reeking of premium trades, right? I'm looking at it, and I've been going back and forth out in time. I mean, we have a clear um, level of support that's been found around $8. And if I come back to my 6 month chart and I draw a line at $8, I think that we'll find that that line has been holding pretty solid. And let me click that again. There we go. So I think what I would want to do with Robinhood, it looks like it has these moments of nice. The investors are excited, but then they kind of lose interest, and then they get back and it looks like every time they lose interest and it comes to $8, there's another influx of buyers. So I always want to be on the correct side of the equation. Let's look at the option liquidity. I'm going to look at this February option. Oh, yeah, not a problem. And they're trading every dollar. So here's a situation where, and I think the long-term prospects for Robinhood are very good. So I wouldn't mind having this in my portfolio anyway. I'd probably wait for it just a few days for it to come back down to this $8 range like it did in the beginning of June. And then it stayed there for most of July. And then it's had this little rally, but I have a feeling it's going to come back down. So I would let it come back down. And I would let it come back down to about the $8 range, where I would then either buy some Robinhood stock in lots of 100, because remember, options are done in lots of 100. They're called contracts. So I would either buy lots of 100 shares, or I could even see myself again buying some of those February options, maybe going $1 or $2 in the money. Then I'd let that thing appreciate for the long term. I'd let that thing appreciate. And if it decides to falter the way it did about 2 days ago, that's when I would sell my $11 near term at the money option, sell the $11, and I'd buy some protective puts down at the $8 range. And so those protective puts will wind up paying me money as we pull back. I really like Robinhood as a premium trade, meaning I can set up an initial position for the long term. If I buy the stock, I mean I own the stock. I'm good to go for as long as I want to be an owner of Robinhood. And I don't think it's a bad thing to have in my portfolio. And then I can just sell premium every month against it, create a little bit of an income from it, and still own that stock. So I like this. I like this a lot.
Yeah, I like it too. Another thing that has been in the news a lot is they're like an acquisition target, not like outright, but some of the bigger brokerage firms have taken some positions in there. So there's definitely some
Yeah.
interest long term
Yeah.
because of their technology, their user base, and even just their, I think, connection to a younger investor. Right there's a lot of value there. So I agree with you. This is a great setup.
It's a good long-term position. So let me adjust my suggestion. I was saying that there is a possibility for you to buy some back month call options when it bottoms around $8. Buy the stock. Own this stock, because I think you want to have this stock in your portfolio for the long term, and then sell premium against the stock. It's cheap enough, right? If you buy 100 shares at $8, it's $800. I mean, I would buy the stock.
Yeah, definitely. All right, moving on to our next ticker symbol. This one comes from Samantha in Annapolis, Maryland, your
Not far from me.
territory.
Yeah, not
Yeah,
far from me.
and this is company Sunrun that I'm unfamiliar with. Ticker
Oh.
symbol RUN. Run. They got a pretty nice ticker symbol though.
Well, I know about this company. This company is an installer, and they are branching out. I think they're based, if I remember correctly, in San Francisco, but they have, I don't know if they're franchising or what, but they are installing solar in some of the key markets here in the States. So they're the big installer. It looks like they did really well around earnings just recently. So here's my thoughts, just looking at this pattern technically, and that is I'm going to draw a level of support and resistance right about $34 for resistance, and right about, and this is actually a lesson for you guys who draw support and resistance. Some of you like to draw support and resistance to the outliers, right? But actually, the best place to draw support and resistance is to where you've got the most tests, where you've got the most activity. So I've got a test here, I've got a test here, I've got a test here. And so I would say more around the $21 mark would be a more accurate level of support than down at, say, $17.50. So let's see if I can just put these at nice round numbers for myself. There we go. I want $34. I want $21. Let's take a look at that. And let's also zoom out a little bit, because sometimes, and I'm definitely a culprit of this as well. Sometimes I don't look past the tip of my nose, and history is everything. Let me come in to about 1 year. So I actually can see that if I went and I extended my support and resistance lines to the left, that this nails it quite right, 21 to 34. And so we're testing top of this channel. So I'm going to zoom back in now that I've looked at the bigger picture. We're testing this $34. Here's what I would do. I would wait for a top to be found. It looks like a top is going to be found any moment now, even with this glorious earnings beat that they did. It looks like investors will start to tire any minute now. And once I've got a good signal that a top has been found, I'd actually consider shorting Sunrun, betting against it. And I can do that in one of two ways. The easiest way is to short the stock, but the other way is to buy some back month put options. And that might be cheaper. Plus, it's a cash trade, which means you don't have to have a margin account to do this. You could actually do it in a retirement account, which I like to do. I like to take advantage of the tax benefits behind that. And so shorting this symbol means that as it goes back down in the channel, you would profit. And so I would let that thing go down and profit for me. And depending on where it pauses, so it looks like it reliably pauses at $21. If for some reason it pauses even lower, like if it pauses down here at the 16 to 17 mark, I might just end that trade, take my profits and run. But if it pauses at the $21 mark or even a bit higher and starts to go up against me, it's the same thing we've been talking about, but in reverse. In other words, instead of selling call premium, I would sell put premium. So near term at the money put option, sell it and buy myself a protective call with a strike price up here close to where I purchased it. And so what happens is we turn it into an income trade. Instead of just profiting on the price of the stock falling back, every time the price rebounds a little bit, we turn it into an income trade by allowing our protective call to profit and offsetting the cost of it by selling premium. So this is what I teach. This is like the premier strategy for turning any symbol into a profit maker. And I think you've got onto something. I would just wait a couple days to have a confirmed top. Use something like this fast MACD that I've got down here. This is a MACD, but instead of the traditional 12, 26, 9 settings, it's a 6, 19, 3. So look for a MACD crossing. You'll get a red arrow, and then verify on the day that you're trading that things are going down. And that's when I would short my Sunrun or buy some back month put options, which is in effect shorting Sunrun as well.
All right. So Samantha, great pickup identifying a potential opportunity. We love to see that. We love the questions, the suggestions, the comments from everybody. So if anyone has any more, feel free to drop them into the chat. If you have any specific questions about trading options, about trading trainer, about the program, about AJ's style of educating people on how to get into trading options, feel free to leave a message and someone will get back to you and try and give you the pitch, give you the rundown, and invite everyone into this workshop as well. This is a great workshop that'll give you a good basic understanding of options, but also educate you on the potential different ways to take advantage of options, right? Whether markets go up or down or sideways or don't do anything, there's a lot of strategies to utilizing options. Other than that,
I couldn't say it better than what you just said just now. So
hey, look, I was always confused for a while with options, but when you kind of simplify it and you can understand the power of leverage in options, you can really trade as if you would, simply buying and selling stocks. So any new investor trader that has those hurdles, AJ and the team are great at helping educate and really bring it down to a level that everyday traders can get involved in.
yeah.
All right, so heading into the weekend, AJ, heading into next week, any final thoughts? Anything that the viewers should be keeping an eye on?
The temperature outside, man, has it been hot. It's been hot where I've been living. Just so it's the summer doldrums, so the market's a little bit tame. We're waiting to see if this market bottom plays out or if descending resistance winds up kicking our butt. But I would just say enjoy your weekend and get back to it on Monday. We'll see how investors come back on Monday after they've kind of digested this employment number.
Yeah, August tends to be a low volume month, right? Most
Yeah.
of the fund managers are out on vacation.
And I'll tell you, low volume months are good for us premium traders. It allows our premium to appreciate quite nice. If you don't know about that strategy, please just take a moment this weekend and join my workshop. It plays all through the weekend. It kind of plays on a loop. So check it out and see if that type of strategy is something that you can include in your investment portfolio. I think you won't be sorry.
Yeah, and if you want to grab a seat, head on over to the chat. The link is in there. You can jump in there whenever you like. Otherwise, AJ, thank you for your time. Thank you, everybody, for tuning in. If you've appreciated the broadcast, hit that like, hit that follow, hit that subscribe button. And we'll be back next week with more options, trading strategies, opportunities. Hopefully, doing our best to enhance your portfolio.
Absolutely.
Thank you, everyone. We'll catch you next week.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.